So what people are most interested in is, of course, the wave principle as a trading methodology. I mean, it is interesting just on its own, but we use it for trading. So let's move on in that direction. This is what I'd like to cover in this section, and that is basically how the wave principle improves trading, what waves to trade, and that is a question I receive on a daily basis. If we know what waves to trade, then what waves provide the setup for that, protective stops, and I always think this is the most important aspect regardless of what method you're using. You always have to protect yourself from a loss that would keep you from trading in the future. Trade targets, and then we're going to put it all together. So you can see here a list of ways that the wave principle improves your trading. I've highlighted what I think are the most important. I like to trade with the trend, and the wave principle allows me to identify that trend. Often it'll tell me when to expect a counter trend move, and importantly, it'll tell me that the move is counter trend, which assists me in gauging how confident I am in, again, the larger trend. Working with different degrees, meaning sometimes I'm looking at a daily chart, other times I'm looking at a 5-minute chart, the wave principle helps me confirm a resumption of the trend. It also at times helps me identify the termination of a trend, and we saw this recently with the dollar fall when I was suggesting in my daily work playing defense. While we did not know if an extreme was in place at the time, we felt we were getting close. It helps provide objectives and, most importantly, points of ruin. Again, where is the count wrong? To me, that is one of the most important aspects, again, regardless of the method. If you don't know where you're wrong, you can get yourself into a lot of trouble. So which waves offer the trading opportunities? Well, I've listed 4 here, but I think that wave 3, wave 5, and wave C offer the best opportunities. Obviously, if I had to choose from these just one wave, it would be the 3rd wave, because characteristically the 3rd wave is the longest of the impulse waves, 1, 3, and 5, and is mostly the most powerful wave. And also, when we get into talking about risk in a few moments, you'll see trying to get in on the most powerful wave also offers us the opportunity to do so at the least risk. And I think that's a good combination. So here's what the chart would look like. Here's a typical pattern we're looking for. So you can see wave, I've highlighted wave 3, wave 5. Here wave A is also included, and there are times, but we'll shy away from that for now, and wave C. And that means that the setup waves, the waves we're trying to identify in order to prepare for the opportunity, are wave 2, wave 4. If you're going to trade a wave A, then wave 5 is important. But I prefer to look for the wave B in order to trade a C wave in a correction. Again, this is a question I get regularly. Which waves are the best? Wave 3, I think, is what we want to concentrate on. Those, from my perspective as a user of the wave principle, those are my bread and butter moves. Those are the strongest waves. There's a little doubt about the trend. If you want to think about a recent example, you think about euro dollar from around August to November of last year, where just day after day after day it closed higher. There's no doubt about that trend. So wave 2, again, is really the best setup wave when we're thinking about trading a 3rd wave. So graphically, here we are again. Wave 2 provides us an opportunity to take advantage of a 3rd wave. A wave correction in wave 4 provides us the opportunity to take advantage of a fifth wave. And I'll skip over to wave B in that downward correction and say that bounce offers an opportunity to take advantage of the C wave down. Now, I mentioned before, I think the best combination of risk-reward is offered by the setup wave number 2, a second wave, trying to take advantage of a strong third wave. So I've used that example to talk about protective stops. Whenever I'm getting involved in the market, I almost ask myself the question, where am I wrong, before I answer the question, where's the market going in terms of level. Of course, I have an idea where it's going in terms of direction, but before I even start calculating targets, I'm worried about risk. So a wave 2, we already have an idea that a trend change has occurred because we have a 5-wave movement. So if we just assume the market's been falling for quite some time, and all of a sudden, say on a, I don't know, let's just say a 60-minute chart, we can count a 5-wave advance, and we were expecting a low, then at that point, I'm not ready to take any action. I'm waiting for the 3-wave decline, the correction of that 5 up, to offer the opportunity. I also know, based on the rules of Elliott, where the count is wrong. Wave 2 cannot retrace more than 100% of wave 1. So I can draw a line there. And as the corrective wave 2 comes down towards that limit, I know what my risk might be. Elliott is one of the few methodologies that gives us many times an absolute number. And when we're trying to take advantage of a coming third wave, looking and trying to count wave 2 to its conclusion, that is the ideal time, because wave 2 cannot retrace more than 100% of wave 1. So many times you'll see me online during the day where I'm warning the market is changing, is turning. And when this is currently one of those times, we're looking for a bottom in the dollar. And you can see over the course of late last week and this week, I've sort of changed my tone a bit and thinking that maybe the dollar has bottomed. Now, that's still unproven. I'm trying to count that initial 5 waves up off of a low, and I'm not able to count it complete yet. So it's still an open question. And that's why you haven't seen me get terribly aggressive. I'm patient. I'll wait for what I think, for the completion of 5-wave movement, and then also wait out wave 2, only then thinking we have an opportunity in hand.